In this video, we're talking about Klarna, the Swedish fintech giant that you need to know more about.
Then we're talking about the company who makes drones that track you through the forest, raising even more money. Stay tuned. It is Wednesday, March 3rd. This is the Piper Rundown. We analyze business and culture to help you win. Today's rundown is presented by Rivers Agile. Rivers Agile merges strategy with engineering to purposefully craft software solutions. Whether it's defining a new product or refining an existing app, they partner with your team to develop real solutions that are tailored to meet your needs. Start the conversation at riversagile.com. Thank you for sponsoring the rundown once again.
Our first story of the day is a fintech behemoth that you might not necessarily recognize. Klarna has announced the raise of $1 billion in further venture capital financing, reaching a $31 billion valuation. That is especially substantial because as recently as September of 2020, just 5-6 months ago, math, go.
Yeah, it was five months ago.
They raised $650 million at a $10.6 billion valuation. So they have tripled in value in less than half a year, which is pretty darn good for such a late stage private startup.
Staggering growth. And it's quite apparent because whenever I am just browsing, doing the online shopping thing, I see Pay with Klarna pop up as an option more and more often.
So what that means is buy now, pay later, BNPL. Partners that you might have seen that in: IKEA, Macy's, H&M, Expedia, Nike, Abercrombie, and over 250,000 other partners using the Klarna system to build in a installation payment process, sometimes with no interest or minimal interest. The fintech firm is now the largest private fintech in all of Europe and one of the largest private startups, period, in Europe. So a win for the Swedish startup that was founded all the way back in 2005. To give you a sense of scale, there's two other large buy now, pay later platforms that are trying, as all fintechs do, try to spread out into other services, but that's kind of the first entry point onto which they've created a beachhead for their business. Afterpay, an Australian-based company, processed about $11 billion worth of transactions in 2020. Affirm, that just went public, had a dazzling IPO.
Oh, what a fun word. And accurate.
Only processed about $6 billion and was very reliant on Peloton as kind of a single entity for a substantial portion of their revenue. By comparison, Klarna processed $53 billion in gross merchandise value. So substantially, far and away, the largest BNPL fintech company in the game right now. And this is an important one for us to kind of continue because what everyone in the ecosystem, but particularly those focused on fintech, are looking for are bellwethers by which to evaluate the other blue chip fintech startups that are all approaching an entry into public markets. So within the next 2 weeks on this program, we're going to break down the Coinbase IPO, which is aiming to be a very substantial fintech raise. There was the Affirm IPO. Bitcoin in general, which is in that fintech space, is going gangbusters. And the other big player is Stripe, which is in the process, rumors swirling about a pretty frickin' large private raise, which some have also speculated will be their last big raise before entry into public markets, which could be a record-setting event by all accounts. So the investors that are involved in something like this, all blue chip as well: Silver Lake, Sequoia, Visa, BlackRock, the Singapore Sovereign Wealth Fund, amongst many others. Lots of folks following on, letting their winter ride in their venture firm to continue to extend those enormous returns. And yet, because of the kind of slow, methodical growth in the early days, despite this soaring valuation, Sebastian Siemiatkowski. I don't know how to say Swedish names at all. Siemiatkowski? That kind of sounds right.
That's a valiant effort.
Siemiatkowski still owns 8%, so this valuation also makes him a billionaire, with those shares being worth over $2 billion. So Fintech is hot right now, and obviously hit subscribe, ring that bell so that we can make sure that you get the Coinbase evaluation when we go in great detail there. But Klarna making moves despite many others not necessarily being aware of it.
Making moves, taking off, taking flight, which brings us to our second topic of the rundown. Skydio has raised $170 million in a Series D, primarily led by the Andreessen Horowitz Growth Fund. This puts their valuation at over $1 billion, making them a unicorn. They have raised about $340 million in total. Skydio is known for its drones, which it released its first drone, the R1, and this was back in 2015.
And we should try to put the video in there. It shows the drone following them through, and then it's like, there was no human operating this. It was all automated.
All automated. It tracks its target through the forest and can dodge any and all obstacles. It is quite impressive. The first drone was originally listed for $2,500, which even for that type of technology is very impressive. The second version came out. They slashed the price in half. Actually, they cut over half the price, and the technology was improved. So now you can get one of these drones for $1,000, which is just insane to me. I think that we could put a lot of good use to that. They also are known for some of the software and services that they provide to commercial and enterprise organizations, as well as some orgs in the public sector. So they work with fire departments and construction firms to do urban planning and remote inspections. They obviously have the tech to back up those services, but they also have recently introduced a drone that is specifically designed for enterprises and military use. They also partner with some government firms. This drone is absolutely wild. It has 3D scanning and 360 super zoom capabilities, as well as a thermal camera, which I don't know, the future is here. Basically, it's here, it's smaller than you would ever expect, and it's a lot scarier in its capabilities.
And this is actually connected to another trend that we've talked about on the rundown, which is the pulling apart of the US and Chinese economies, relations, what have you, because DJI, if you might remember from a couple years ago, was like the bee's knees as it pertained to consumer drones. And because of executive orders issued during the Trump administration, blocking the investment and in some ways, shape and forms, even the sale and import of companies and goods associated with the Chinese military, so that US investor dollars were not necessarily, or consumer dollars were not being spent on enterprises that were supporting the Chinese military. That blocked DJI from having the same amount of access to US markets, and just in general, a willingness of private investors here locally to invest in those type of companies. So that's really one of the things that threw the gates open for Skydio to move into both public sector uses like military and private enterprises, because it becomes a risk vector to say, hey, in the same way that there are bans around the use and utilization of Huawei technology in your stuff if you want to use it in Western markets. Same stuff happening here with DJI, opportunity for Skydio, and probably a godsend, because when I hear of a company taking on over $300 million in private funding and just barely surpassing that $1 billion valuation mark, that is not the Klarna story. That is the story of a company that doesn't quite have that capital efficiency to create those special returns. Maybe that's coming in the future. Seems very highly possible given how crazy that tech is. But it'll be really telling to see whatever that next valuation looks like, if this is a company that's going to emerge as a profitable startup. Speaking of questions still for a startup and a relatively unproven technology, Lucid Motors is going to be receiving a valuation of over $24 billion via a $4.4 billion injection of capital via a SPAC led by Michael Klein, the former Citi exec, who we spoke about on a rundown last year, having operated or issued one of the largest SPACs ever in the multi-plan deal. Clip. The largest ever reverse merger via a special purchase acquisition company has taken place.
Yes.
A completely clean public shell company was created via an IPO. They had no business plan, they had no business model, they had no forthcoming or inbound revenue, but the investors were convinced to put money into that vehicle with the express intention of merging with or acquiring another firm and basically using the public status to bring that company over from a private to a public scenario.
SPAC.
So Michael Klein is at it again, taking a company, and another thing we literally talked about on Monday, these SPACs, companies with no real revenue. This is a electric vehicle company co-founded by a former Tesla engineer that claims to have 500 miles worth of range on a single charge, and yet no real commercial delivery at large of these vehicles, just a few test vehicles that can be driven around. So a highly speculative investment hitting the public markets, exactly in line with the assessments that we've made about markets generally, where they are very frothy, very speculative. Money is being crammed into anything remotely resembling having an opportunity for returns, and mildly concerning for anyone that engages with the economy.
Yeah, that's fair.
But a really absurd, like, to me, and I don't know anything about the technology behind electric vehicles, but my kind of baseline is there will be a few, and a very, very few number of new automobile companies successfully built that survived this entire cycle, that were built with those presumptions in mind. But the idea that maybe not an overly indebted automobile company like Ford, but a well-run one like a Toyota, definitely on the luxury end, that those very well capitalized, very experienced, with enormous departments of engineers and the capacity, the recruiting function to just bring in new talent should they want to, I have to presume that a lot of those companies will be able to develop their electric vehicles. Like that was literally the whole deal for GM at the Super Bowl this year.
Exactly.
GM is saying we're going to have 30 electric vehicles by 2025. You're telling me that they still have all the brand equity. Right. They have the ability to hire Will Ferrell.
Right.
For a commercial like that. Well, they're not going to be able to deliver that. They're going to get beaten by a firm that hasn't shipped 100 vehicles yet. That doesn't make any sense to me.
Yeah.
Maybe that's wildly ignorant. I could be wrong, but that's the thing that I just keep coming back to.
Yeah. I think, to me, the GM thing reminds me of the It's Toasted thing from Mad Men, where all of these companies, they could be on track to produce that amount of EVs within this time frame, but none of them are quite as progressive. No one else that I can remember from the Super Bowl made a statement about producing electric vehicles aside from General Motors. And now that General Motors did put that out, it's like,
but the Nissan Leaf already exists. The Toyota Prius already exists. There's a luxury Porsche and a luxury BMW, and I think I don't know about a luxury Benz, but I know there's a luxury BMW and a luxury Porsche that do the electric thing already, or at least hybrid, in the sense that it's a completely usable, sustainable vehicle today. And it's just Elon Musk has been super transparent about how close he went to just the entire company folding. He had everything break his way at those like make or break moments. It just seems incredibly risky, and it's getting bid up. So what's getting before Lucid isn't even public yet, it's getting bid up because people are like excited about it. That would scare the fuck out of me.
Yeah.
I would not want to be in that.
Agreed. Well, that's the rundown. Here we go. We are. Oh my god! You want to try again?
I won't get it.
No chance. That was pretty close. Yet another paper behind the radiator. We are back in my apartment. The co-working space we were working out of seems to be closing its doors.
It's closing its doors.
So this is the new setup, the new old setup. I was bragging to Aaron earlier about the plant that I have kept alive since September. So we are slowly but surely making upgrades around this place. That's the rundown.